What would we do without these guys? And top that trade. Here for some fun and games, Phil Flynn, a Fox Business Network contributor, and Alan Nuckman, the chief market strategist at St. Paul Research. Here we go, guys, with round number one. PE pressures. What high PE stocks do you think can pay off or plunge? I'll give you a few names. Netflix, Amazon, Zoom, and Peloton are all high PE stocks.
Well, when it comes to the PE ratio, it's all relative. Now, let's not ignore the fact we're at all-time highs, which should be no surprise if you've been watching this. But the component that I'm looking at is the earnings of the PE. And the earnings are continuing to expand exponentially in some cases. We had earnings come out this week. JP Morgan, $14 billion. Bank of America, $8 billion. Wells Fargo, $5 billion. And Goldman Sachs, $7 billion. That's profit for the quarter. So therefore, earnings are expanding. So I'm not scared.
I'm glad you're not scared. And I don't think it should be. I mean, you look at this environment that we're in right now, and profits, as both Alan and I have been saying in recent weeks, are really being helped along by Federal Reserve policy, low interest rates. And as long as you have that on the equation, the price to earnings ratios don't matter because there is an expectation we're going to see some growth. You're seeing a lot of these companies exceed on earnings because of the reopening trade, right? Now, the problem will come at some point when we start to taper, that ugly word you hear from the Fed. When they start talking about that, it might be time to take some profits, lighten up a little bit, but at least until we hear that taper word, it's all systems go.
Round number two, bad bonds. According to historic data, bond traders are not so good at timing the Fed. What are the markets telling you about rate reflation?
You remember everybody a few days ago was freaking out. Oh my gosh, the rates are going up. They would sell everything. This is the
except us.
Except bonds. Buy bonds, buy everything else. All of a sudden, we're not hearing so much about that. It's not that much of a concern. And to be honest with you, where interest rates are, they're at a historically low rate. They're not a concern at this point. At some point, with the big deficits that we have, if rates do start to go up dramatically, well above 2% or 3%, then you might have a problem. But I think in the near term, I don't think, rising interest rates, I thought it was a false signal to get out of the market. And I think people who looked at that probably are regretting it right now.
It was a very crowded trade, and those type of trades, those people are usually wrong. Let's see. We did top out in the yield, so it traded between 1.5% to 1.75%. If it breaks down below 1.5%, then we're going back down to 1.25%. So it may be just the crisis du jour that may be done.
Round number three, dividend pay. Dividend stocks pay you to play. So pick your big payer, top that trade player.
I was going to say, mine's a little odd, as I've been accused of. Mine's on Apple. Apple still has nearly 10% to go to its highs, even though the market in tech has made a complete comeback. The yield on Apple is 0.6%. The yield on the 5-year note, 5 years, is 0.8%. You're getting a better yield annual. I mean, it's almost a good yield annually in Apple than you are with the 5-year note.
I'm going to come up with one even crazier than that. It's one that I've mentioned before, which is a great dividend play, but it's also a great short-term day trading stock. All you Robinhood guys out there, take a look at Macy's, okay? This is a stock that continues to pay a dividend, but, has some good stock moves as well. So you can win two ways. You can hang on to it for the dividend, or, whenever you get a nice little pop on the stock, you can kind of sell off. You get paid twice, a little bit of appreciation on the stock and the dividend. And with the volatility in that stock, more often than not, you get a chance to buy back in lower.
Here's your bonus round question for today. It is a fill in the blank. Americans now have too much what? Is it money, toilet paper, or Bitcoins?
Money.
Not catch up. Well, it's not catch up like you said last week.
It can't be Bitcoin because there's not enough Bitcoin to go along, and people are spending millions of dollars to mine for more Bitcoin. So you can't have too much of that. Toilet paper, everybody did load up on toilet paper. They were panicking, and when the Suez Canal got shut last week, they thought there would be another. I'm going to say toilet paper. They have too much toilet paper. It's got to be.
Okay, I agree.
The answer indeed is toilet paper. Great job, guys. Thanks so much for being on the show. Business First AM continues right after this. More Business First AM. Check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.